Are the next 24 hours about to be mega bullish for crypto? Is the Layer 2 base about to launch their own token? And why is this one coin taking all the attention and pumping like crazy? This is your Altcoin Buzz News. Hey, what's up everyone? My name is Cody, and if you're new here, make sure to like, subscribe, and turn on notifications so you know when we drop latest content. Follow us on Twitter, altcoinbuzz.io, and as always, is not financial advice, and wish the best of luck in your crypto ventures. Also, make sure to join us for our X Spaces Tuesday to Friday at 9 a.m. EST, link down below. All right, good morning, guys. Bitcoin it's holding up pretty decently. It's still around $115,000. A lot of altcoins sold off yesterday. We are seeing some de-risking going into FOMC tomorrow. But I will say it's a bit strange because the markets, the TradFi markets, are at all-time highs. So we have the S&P at all-time highs above 6,688. We have the Nasdaq, which even on futures is up another percent before the market even opens today. So Nasdaq at all-time highs, gold at all-time highs. Bitcoin is sitting at $115,000 and pretty much has done nothing over the past day. So a lot of people on the timeline are upset that, it seems like it's over for Bitcoin. Meanwhile, we're just kind of going sideways while TradFi markets are continuing up higher. I will say, I do think, it's not over. We're definitely going higher at some point. It's just, are we going to de-risk before FOMC more tomorrow or during? Is tomorrow going to be a little bit of a sell-off event? And then over the next couple of weeks, we then continue higher? It's very hard to say. So that's why I'm not going to do too much TA because it's very hard to predict what the volatility will bring. I just know if we do come down here towards 113, that is where I'd be looking to bid Bitcoin because I like this as a higher low and a continuation higher. So I'm still looking for this blue box down here for Bitcoin. But in the meantime, it's just consolidating up here, which is still bullish. The fact that it hasn't completely broken down here means that it is still bullish. The fact that it's consolidating all the way up here at 115,000. So we have the Fed rate cut tomorrow and Powell's speech. We can expect more volatility and potential de-risking across the markets, especially after New York Open today. And then we have Michael Strahler's strategy buys another 525 Bitcoin worth $60.4 million. We have Ash Crypto saying US stocks are exploding to new all-time highs. Meanwhile, Bitcoin can't even break above 117,000. This isn't about weak demand. It's about manipulation by market makers and exchanges. So let's break it down. In the early days, Bitcoin's price was mostly spot-driven. Buyers purchased coins and supply got absorbed and the price went higher. Simple demand versus supply. Today, things are very different. Enter futures and derivatives. Exchanges realize that creating synthetic Bitcoin contracts is far more profitable than actual spot Bitcoin. Why? Because derivatives let them move markets with leverage without needing real Bitcoin. For example, when Bitcoin touched 124,000, market makers and whales dumped via futures and ETFs, creating a cascade of liquidations. Bitcoin dropped to $107,000, a 17K crash, and guess what? They made billions on shorts and liquidations. Now ask yourself, is that more profitable than letting Bitcoin run freely to 150K? For the cartel, controlled dumps equals guaranteed profits. For retail, it looks like volatility. But in reality, it's a profit engine for the insiders. This is why Bitcoin often lags behind macro. US equities hit all-time highs, liquidity flooding into risk assets, and yields coming down. Logically, Bitcoin should fly, but instead it's trapped in a manipulative cycle. Important point, this doesn't mean that Bitcoin is weak. In fact, it means the opposite. If insiders are working this hard to control Bitcoin, it shows how valuable it is as a global asset. They want to maximize profits before the real parabolic run begins. Spot demand is building quietly, ETFs keep absorbing coins, exchange reserves are shrinking, and long-term holders are not selling. But futures and derivatives create the illusion of weakness to shake out retail. This cycle is still intact. We've seen this movie before in 2017 and 2021. Both times, Bitcoin was suppressed, shot up sideways, then exploded higher. This time is no different. The only change is manipulation is bigger. So don't get trapped by the cartel's game. They want your coins cheap, they want your leverage liquidated, and they want you frustrated. So stay focused. The real parabolic leg is coming. The conclusion, hold spot and chill. The market will explode soon. So pretty good post on why, Bitcoin is going sideways and, markets are at an all-time high. And then we also have Tommy Lee saying these are his top trades if the Fed cuts rates in September.
I'm looking at September 98 and September 2024 as the playbook, because those are both years where the Fed was on extended pause and they cut in September. The number one trade is NASDAQ 100. So I think that's why the Mag 7 and the AI trade gets a lot of lift off. The second is monetary liquidity sensitivity, global central banks easing. That's Bitcoin and Ethereum. And seasonally strong, I think they could make a monster move in the next 3 months, like huge. And the third, of course, is interest rate sensitives. That's really small caps and financials. But really, the first two might be the standout trades.
A quick shout out to Surge. It's this risk-free prediction game on Telegram where you just swipe to guess pump or dump, you earn rewards, and you pick up some market skills while you're at it. They've also just kicked off a daily giveaway. It's super simple. Every day there's a coin of the day, and today it's Shiba Inu. All you have to do is swipe to find on the Surge app, screenshot it, and drop it under their tweet. One random reply wins $10 in USDT, so it's super easy. So check out Surge, have some fun swiping, and maybe snag some prizes along the way. And then moving on, we have Base, and we have a potential Base network token. So Brian Armstrong of Coinbase says it could be a great tool for accelerating decentralization and expanding creator and developer growth in the ecosystem. To be clear, there are no definitive plans. We're just updating our philosophy, and as of now, we're exploring it. So they said this.
Because the only way we're going to have this positive impact on the world is if we're willing to push boundaries and be creative and figure out how these new tools can unlock new systems for all of us. And so with those as the North Stars, we're going to be exploring a network token for Base. We don't have all the answers. We really don't. But we're going to figure it out. And we're going to figure it out together. Because we think this could be a really, really powerful tool for building the global economy that all of us believe in. And as we do that work, I want to make 3 commitments to all of you. The first, and this is just to kill the FUD, we're committed to building on Ethereum.
And then we have other speculators saying Base token confirmed. Did you check your score yet? So the Base token is now confirmed. It's a matter of when, not if. It might take some time, but we no longer need to speculate or make wild guesses about whether it's coming. Interestingly, Brian Armstrong, the co-founder and CEO of Coinbase, released a site in August 2024 where you can check your Base on-chain score. Many of you have already checked it out. If not, you still can. If you did earlier, it might be a good time to check your latest score so you can check it out. And there are many tools available to check your engagement on Base, but this one comes directly from the co-founder and CEO of Coinbase, so it's worth paying attention to. Factors like total transactions, unique days of use, longest streaks on Base, swaps, bridges, lending, and borrowing, and smart contracts deployed will all play a role in this big checker. The airdrop criteria will probably not be exactly the same, but this still gives you a clear idea of your wallet score. I got a 95 out of 100. So if you are potentially looking for a Base airdrop, it's a good checker to see kind of what your Base score is. And if you want to potentially get a Base airdrop, it's probably a good thing to start using a lot of the swaps, bridges, and lending while you can right now, because more likely than not, they're going to come out with a Base token. And then we have Lark Davis saying Q4 is looking primed to be the most explosive leg of the cycle. Here's why. The markets are pricing in 3 rate cuts for the rest of the year, the Fed ending quantitative tightening, and the Treasury stepping in with quantitative easing. $7.4 trillion sitting in money market funds. That's an all-time high. The Solana Treasury companies are stacking billions of dollars of SOL, and many potential altcoin ETFs are coming. The setup is looking filthy bullish. And then we have Anthony Yim saying a subtle but very significant line in Kyle Samani's announcement. Kyle Samani announced that they were doing a Solana digital asset treasury. He said, "We believe that the convertible and perpetual preferred structure that strategy popularized works far better for a Solana digital asset treasury than a Bitcoin one. We also believe that preferred products are the future of DATs, and that's why Artemis launched the only DAT dashboard in the world focused on these preferred equity products." So Artemis, which he's the co-founder of, you can now track all these digital asset treasuries across all different kinds of companies. We have Solana ones, we have Sui ones, we have Bitcoin, ETH, Hyperliquid. And we also have Pantera Capital saying, "We're proud to co-lead a $500 million plus pipe into Helios, which is HSDT, with Summer Capital to launch a preeminent Solana-backed treasury vehicle. We believe this will unlock capital markets access and accelerate Solana's adoption globally." So Pantera now launching a Solana digital asset treasury as well. And we also have Pantera Capital's Dan Moorhead saying this about Solana.
How do you think about Ethereum versus Solana right now?
So in
terms of the better bet.
Yeah, so there's going to be a lot of important blockchains over time. Solana is the fastest, cheapest, most performant, and so it's actually had better performance than even Bitcoin over the last 4 years. And that's why we want to have access to normal investors to something that's not very well known, but actually has been outperformed.
Do you think that one, though, outperforms the other? They're used for different purposes. One, it's a winner-take-all. What's your thought?
No, it isn't. It's not like there's not a winner-take-all on the internet, right? We have lots of different internet companies. There will be lots of blockchains that are important. But our biggest position is Solana. We have 1.1 billion of Solana on our books.
But how many different protocols do you think long-term? You said, yes, there's lots of companies, but there's not lots of protocols on the internet.
Great question. I think there's a single-digit number of layer ones, things like Bitcoin, Ethereum, Solana. Not thousands, but definitely not one.
Mm-hmm. And is there anything that you've seen come on the scene where you go, that technology is actually better?
Well, right now, Solana. Our biggest position is Solana. We've had huge positions in Ethereum in the past. We used to be 100% Bitcoin. something could come out tomorrow.
And then moving on to Sui, we have Sui just did 9.2 million transactions in the past 24 hours alone. We have Sui interns saying the Sui group launches their $50 million Sui buyback while holding 101.8 million Sui in treasury, showing strong belief in Sui's upside. We also have Eisenhower saying, stacked up Sui network versus one of my favorite crypto companies, Chainlink. The results are very interesting. Zoom in and it looks neck and neck. Zoom out and you see who's really ahead. The daily token volume as of September 13th is $1 billion for both Link and Sui, and you can see they're pretty close here on the daily volume trends. But cumulative volume tells the real story. Sui is at $516 billion, while Link is at $336 billion. That's a $180 billion difference. Not to mention, Chainlink had a 6-year head start on Sui. So we can see here the total cumulative volume, Sui is way higher as of September 13th. Cumulative volume reflects demand, pace, and utility. More demand, more routing, more on-chain presence. It's the clearest sign of sustained liquidity flow. Sui launched 28 months ago and is keeping up with industry titans and original chains. In that window, Sui has almost doubled Chainlink's all-time settlement. Whenever a new chain racks up 516 billion in volume this fast, you're not early to a narrative. You're watching product market fit play out. High volume layer ones have structural tailwinds, ecosystems build faster, liquidity gets recycled, and you just stick around longer. That's how network effect gets locked in, and traders look at price, operators look at volume, and pros look at trends before they happen. Sui is still underappreciated by most of the market, but not for long. Now as for Sui, it's playing out exactly how we want it. The only issue is that we have FOMC tomorrow, so that is the one thing that's preventing me from taking this trade exactly right now. You can see here, we charted this out a while ago where we wanted this to break above this, breakdown here around $3.47. We wanted to come back above, and it's come back above here, it's come back down, and it's retesting this now, and it's sitting there perfectly. This is exactly the place that I wanted to enter long. The only issue is, are we going to have more manipulation at New York Open today and tomorrow? There's going to be a lot of volatility, so I'm not sure if I want to enter just yet. I might wait a little bit, but this is a picture perfect entry for me for Sui. Otherwise, if we didn't have these macro factors going on, if you wanted to buy this spot, I think this is probably a pretty good area. The only issue is if you're buying this on perpetuals, I think there's a decent probability that maybe they wick us down here before continuing higher, or there's just some kind of manipulation going on between Bitcoin and altcoins over the next day, because everyone is expecting this rate cut that is happening tomorrow. So when everyone is expecting something like that, usually doesn't go how you want it to go. Because everyone's expecting this, I don't think we're just gonna have the announcement and then just fly straight up, because everyone is already pricing that in. So I think there's going to be a little bit of manipulation going on, which is why I don't want to enter just yet. But if that wasn't going on tomorrow, this is where I would be entering, and I really like Sui right here. And then for a coin that has been taking all the attention, we have Nansen saying, are we so back? Across every tier of Nansen users, from free, pioneer to pro, the same token leading attention in the past 24 hours is AVNT, which is Avantis. So we have Avantis, which just launched yesterday. And so we have yesterday, Avantis smashed all records at 2025 TGE. 4 simultaneous exchange listings less than an hour apart from leading exchanges like Upbit, Binance, BitThumb, and Crypto.com. We're grateful to all our new partners for the support, hitting $2.2 billion plus in daily spot volumes, a top 10 coin overall by volumes, $6 billion plus in perps volume, and the largest on-chain airdrop on Base. So this is you can see here, this is a DEX market basically on Base, which launched yesterday, and they had an airdrop at the same time, and then it also went live on all these exchanges at the exact same time. So they had a really good rollout. Now, this only furthers our vision of building the universal leverage layer, an all-encompassing exchange for real-world assets, including perps for equities, metals, FX, commodities, and crypto. Real-world markets where perps for prediction markets, sports, and more, zero-fee perps, high-leverage scalping products for precision traders, and stablecoin with AVUSD, the native exchange stablecoin powered by yields from the underlying trading products. It also has a native money market, bootstrapped via AVUSD for enhanced supply, yield, and capital efficiency. So you can see we have Coinbase for equities, we have the NASDAQ, we have the SPY. For crypto, we have all the traditional crypto stuff. For Forex, you have a bunch of different Forex pairs. And for commodities, you can trade gold and silver as well. Now, this is a big rollout, and it also had an airdrop, which is why it's getting so much attention. And we have KXB2 says, why is Avantis pumping? Peter Thiel backed, Coinbase invested, and Base needs a flagship perp DEX that uses Base-specific tech, flash blocks, just like they needed a flagship AMM, which was Aerodrome. So if Coinbase wants to build Base out and they want to have a competitor to Hyperliquid, for example, they need a really good perp DEX. So Coinbase is going to put a lot of their resources into growing this, which is why it's pumped so much, because they think if Coinbase, which is one of the richest crypto companies, has the resources to make something big, it's probably going to be this perp DEX, because they see how well Hyperliquid is doing and how much money and revenue it makes. So rumors of rev share, buybacks, growth, and revenue meta strategy disclosed soon. Think of similar ones like Pump Fund, DeFi Tune, Chainlink, ENA, etc. And their product generally works. You tell me, why should it not pump? So it pumped like crazy yesterday. Now, I will say it is selling off, obviously, because we had a huge pump and it's down 22% today. But it's a little bit too early to say, what we can expect of this. But this is kind of what I'm thinking. And it looks like it might be selling, it might be even a little weaker today. But I think we're probably coming back down to this level around 80-ish cents, to this level of consolidation before breakout. I'm not sure if we're going to continue much higher. I think it also really depends on how many people are going to sell their airdrop, how many people are going to sell it before potential news tomorrow and de-risking before FOMC. I think this is a good area potentially. If this holds, you're going to want to watch this for like a day or so to see if it actually holds this level. But this is probably the next level we're coming down towards, which is 80 cents. I'd be surprised if we just stopped right here and then immediately continued higher. I think we'll probably test this out down here to see what happens. We could continue lower, so this isn't one I'm going to be touching yet. I want to see a base start to form before heading higher, but it's too soon because you can see this is the daily chart, and we don't have much price action on this yet. So we're going to want to wait a little to see how price plays out. But I think we're probably going to be able to get it back down here towards 80 cents in the near future. And then speaking of perp dexes, we have 21 Shares launches DYDX ETP for investors. And this time, the focus is on DYDX, one of the largest decentralized perp protocols. The new fund gives investors regulated access to DYDX, the protocol's native token. It extends 21 Shares' efforts to repackage DeFi for traditional markets. The launch underscores a big trend. Institutions are warming up to crypto derivatives, and centralized platforms like Binance and Bybit once dominated this segment. By moving into regulated ETPs tied to decentralized protocols, 21 Shares is bridging two worlds that often seem miles apart. Now, ETPs are financial products that trade on stock exchanges and track the value of an underlying asset. In Europe, crypto ETPs are usually backed one-to-one by the tokens they represent, making them similar in spirit to commodity-backed products such as gold ETFs. For investors, this means they can buy exposure to tokens like DYDX through a brokerage account without managing wallets, private keys, or custody themselves. And the launch is more than just another fund. It reflects how DeFi is evolving from experimental tools into institutional-grade products. DYDX, for example, specializes in perpetual futures, a type of contract that allows traders to bet on assets prices without expiration dates. This model has fueled the growth of crypto derivatives, a market now estimated at $28 trillion. And just remember, in TradFi, they don't have perpetual futures. They always have contracts that end at some point. And so this model is now starting to be more accepted in TradFi, and 21 Shares wants to bring this into TradFi through the DYDX ETP starting off in Europe. So that is the video for today, guys. I think tomorrow we're going to have a lot of volatility. I think today we're also going to have a lot of volatility. So I'm not going to be taking too much trades. I think we're going to have to wait and see how the dust settles. I think it's a very, very real possibility we have a kind of sell the news type event, but into support. So I'm hoping to get prices down here towards $112,000 towards $113,000 for Bitcoin. And similarly, altcoins will have to see where they go to. But I think because everyone is expecting this news to come out tomorrow, I don't think it's just going to pump straight up because everyone is already expecting this to happen, which is why I think, the S&P and the NASDAQ are at all-time highs leading into this event. And so I think crypto is going to have a bit of manipulation going into this event and afterwards, but I think ultimately we do go higher. So probably better to be buying a spot around these levels anyway. So that's the video for today, guys. I will see you tomorrow for FOMC and the Fed rate cut day.